Hello, everyone, and welcome to another episode of the AI Cash Grain podcast. I am Satish Nandapurkar, Director of Data Driven Strategies for Quantum Hedging, and today is July 19th. In this episode, first we'll go to Cy Monley, and he'll talk about the continuing slide in both corn and soybeans. Corn was down 10 cents to 404.75. Soybeans continued from last week, down 29 cents, just continues that slide, and it closed at 1036. Then we'll go to Kevin, and Kevin will talk about what the models are saying. With respect to corn, the models are kind of thinking maybe we've gotten to a little bit of a bottom here. They're seeing a bright spot where they think by August and September we're going to go higher. Kevin will talk a bit about that. But for beans, thinks it's kind of 50-50 out to August, but then more downside into September. Not great news for beans coming from the models, but some pretty good news for corn coming from the models. And then I'll follow up again, like last week. Our recommendations are going to be to hold in corn. We're 50% sold. We're ahead of the index. And beans, we're 40% sold. We're on track of the index. So I'll come back and talk about the reasons why. But let me turn it over to Cy. Cy, do you see anything that's going to stop these slides in corn and soybeans?
All right, thanks, Satish. It kind of feels like the weather markets are over. I'd say for both corn and beans, maybe we have another 3-4 weeks left of what if, so we don't absolutely collapse. But, if we reach a 182 corn yield, which a few people are putting out, sort of feels like, maybe you got to go down to 380 before you unearth some demand. I know we still have a couple weeks of weather left. Maybe there's a 10-20% chance there's a one little shake left where you get a rally. But as of right now, the function of the corn market is to go find some demand. And same things with the beans. The bean market hasn't unearthed that demand just yet. And I know we have August weather for beans. So again, maybe there's some little short covering pop where you get an opportunity to sell. And I think if you're a farmer, you should be taking advantage of that. But as of right now, nothing's really threatening. And I think we're just going to kind of drift lower, going to find that demand, both for corn and soybeans. Kevin, is there anything different in our models that would say, okay, hey, maybe we do get a nice little rally to sell?
Hey, thanks, Cy. Our models are shifting a little bit. We had a really sharp down week again, corn off 10, beans off nearly 30. Our corn model is starting to pivot a little bit. It's suggesting that we might have a slim chance or some chance of upside here as we get into the last, call it 3 months of the growing season. There's not a lot to grab hold of here. I think mostly what our models are picking up on is really some of the technical indicators. Again, just to remind everyone, we have over 400 features that are going into our model. Our model is constantly looking for the best features that kind of predict this time of the year and kind of where those features are, also determine if they get picked up in our model. And so our model is kind of picking up on kind of the big moves down, and some of the technical indicators suggest some chance of an upside move here. Not a big move for sure. Certainly, I'm sure farmers would like to see prices that are closer to $5 instead of low $4 range where we're at today. But at least maybe some of this sharp selling has reached a bottom here. Right now, our range of expectations continues to be pretty tight, somewhere between 380 and 460 as we get towards the end of the growing season. As we look at kind of point level forecast, I will remind everyone from last week, our end of July forecast was 405 when the market was 415. And sure enough, we did close at 405 on Friday. Right now, our models suggest some chance of upside. Not a lot of probability weight on the first 2 months here, basically a coin flip, because it's really not a significant feature. There's a significant move that our models are picking up on. So it's not putting a lot of probabilistic weight on it. But when we get into September, October, the chances do improve that there'll be some modest upside from the 405 mark where we're at today. For beans, unfortunately, beans just don't really have much of a story to hang our hat on for the upside. Our bean forecast continues to be weighed down by ample soil moisture, which really kind of puts good conditions for the second half of the growing season. Also, temperatures. Those of you who are watching our daily weather briefing, you'll see that the temperatures are really kind of moderating, and so there's not a lot of threat on the horizon for yields for corn or for soybeans right now. But again, our model last week, predicted 1036, when we were sitting about 30 cents higher, and here we are at the close on Friday at that 1036 mark. So, our model seems to be directionally giving us a pretty good indication of where it's going to track. Our range of forecasts still pretty wide, $9.30 to $11, but right now, not a lot to really suggest strong upside here. As we look at point forecast, probably low $10 is realistic at this point, with 70% odds for at least touching down in the kind of $10 mark. So that's where we're at today. I'm going to turn it over to Satish to talk about our strategies and kind of features that are important for our models.
Thanks, Kevin. And now for recommendations. Just to recap, what are the purpose and our goals with our recommendation is. It's to beat the typical producer cash sale index, which sells a predetermined amount of grain every month at the end of every month from January through October. That index for both corn and beans would have a farmer at 40% sold in corn and 40% sold in beans. Interestingly enough, if you heard what Cy said, a lot of the farmers that we know aren't even 40% sold yet in corn and beans. So they're actually a little bit behind the curve in corn and beans, and have grain in the bin still sitting there to sell. So that is a little bit of a worry, but we mark ourselves against this index that we think is a prudent index, kind of a base index to use. And when you look at where we're at, again, our recommendation for this week in corn is to hold. And that's because we're actually oversold versus the index. And we've been oversold for just about all this drop. So that's been great for us. Relative to the index, we're 50% sold. The index is at 40% sold. Our average price is 465. The index's average price is at 458. We're all the way down at 4 and change now. So I think our outperformance will pick up with this oversell. On the corn side. On the bean side, unfortunately, the models just didn't give us and didn't pick up on this massive slide quick enough. And therefore we were a little oversold, from all the way through May. But we didn't continue that oversell into July. It just didn't pick up on the second half of this slide. We got the first half of the slide, but we didn't get that second half of the slide. So we're even with the index. We're ahead of the index by about 12 cents, which is great. Our average sale is 11.68 because we got a little oversold, and then we matched just before the first part of the slide. Whereas the index is at 11.56. So we're at hold again for another week after, we've gone down so much from above 12, now down to like 1030s. So the simulation is basically saying hold at this point again. And with that, let's do just a quick recap of the week. Again, corn and beans both slid. Corn was down to 404. Beans was down a decent amount, all the way down to 1036. Cy talked a bit about how weather markets kind of feels weather markets are over. Maybe there's a little bit going into August for soybeans, but for the most part, that weather risk is over. A lot of farmer supply, grain in the bin, and farmers are kind of undersold at this point. And in the trader view, we're probably going to drift lower until we find demand. Now, the models have something a little different for corn. Kevin talked about how the models for corn are picking up on some chance here that we have found a bottom, and we will get a little bit of a bounce back into August and September. In beans, the models are expecting kind of a flattening out until August, but still a continuation down into September. The simulations that we have are basically saying, hold on corn, don't get more sold on corn. We are oversold relative to the index. We're ahead of the game. On beans, we're even with the index at 40%, but we're 12 cents ahead of the game. So the recommendation here is to, is to hold also, and in both cases, wait for more data, see what happens, see if the slide stops as the models are kind of predicting into August, and then start selling more based on what the next data shows us. So again, as always, thank you for being a subscriber. We really appreciate you listening in, and we love doing these things. And we'll see you again on the next edition next week of the AI Cash Grain podcast. Thank you.